Morning, guys. There won't be any attendance taken today, so because I'm not going to look at them even if you fill them. Let's continue talking about chapter 7. I'm going to briefly talk about the nature of the stock market a little bit first. It's not like what it used to be a few years ago. Until about 1973, you pretty much had the New York Stock Exchange, the iconic floor. People are trading there. But now it's a very different environment. Now we have New York Stock Exchange, we have NASDAQ. Even if you're not trading anywhere over there, you have your online brokers. All I have to do is log on to my Robinhood account and trade any way I want. Sometimes they execute those trades between Robinhood members. If there isn't anybody who's willing to buy your stuff, they send it to the overall market and things are executed rather fast. Second, something wrong with my mouse. In terms of the differences between major markets, New York Stock Exchange obviously historically has been a floor-based exchange. It has a physical location, and the way the orders are executed, as clients, you give orders to your brokers. They bring them to either they can fill it by matching with the orders of other customers, or they can go ahead and bring in the market and get the best possible price for you. Exchanges bring certain things to kind of increase liquidity. So anytime I give an order, it's always a good idea to the extent possible to order to execute these orders fast and at the best possible price. Just because I said I'm willing to buy something at $56, if somebody is willing to sell it at 55, you know, as the broker or the executor of the trade, it's my job to get that 55 for you, even though I'm willing to pay 56. Uh, certain Until 2006, New York Stock Exchange had members. It was essentially a private corporation, and these members essentially owned the exchange itself. You had seats, and these seats allow you to trade in the floor exchange. I mean, you still have seats right now, but New York Stock Exchange is a publicly traded corporation now. You still have to buy trading licenses to be on the floor. At the end of the day, it is a physical location, and Manhattan is not that big of a place, especially downtown Manhattan. Yes. So you have to have a trading license? Huh? So you have to have a trading license? Yes, I don't know what it costs now, but it used to cost $50,000 a year or so. It's just a fee. It's a fee. Yeah, that allows you to be on the actual floor. Of course, this mattered a lot more in 1980s, 90s, but nowadays everything is electronic. But there is still the physical human component. Uh, there are many types of traders. You can read about them, floor traders, floor brokers, what have you. But two most important, I should say, institutions in New York Stock Exchange, one of them are called specialists or the so-called designated market makers. And especially large stocks typically have one designated market maker. These are specialized members of the exchange, and their job is to provide liquidity to the market. These guys trade for their own account. Let's say uh, I'm one of these DMMs or specialists, and my job is to make markets in Apple stock. So I come in and at any point I say, I'm willing to buy this many shares of Apple at this price, and I'm willing to sell this many shares of Apple at this price. Those are my market makers. You don't have to trade at my prices, but at a minimum, there will always be a price. Okay? Which means, when things are going bad, suddenly there is no shortage of buyers or sellers. A lot of times, these guys have actual physical posts. Floor brokers, whenever they want to trade, go to that post, see what the quotes are, and based on those quotes, either they trade at those quotes, or there are obviously other brokers, and maybe one of the brokers have a better price, and you trade with those. Since they provide such a service, they don't pay that much fee to the exchange. In fact, sometimes the exchange actually pays them for the service they provide. There are also so-called supplemental liquidity providers. These people are not required to offer a two-sided market, but they come in and they can do high volume transactions. And again, for their services, they don't pay as much fees to the exchange as other brokers would do. Nasdaq is different. A, it has no physical location. Okay? It started as an electronic market in 1973, I think. Of course, those days they had dedicated phone lines and stuff. There was no internet, but through those dedicated phone lines, there was a communication. And any member of NASDAQ can be a market maker. All you're doing is, okay, here's an Apple stock. I'm willing to buy 200 shares at this price. I'm willing to sell 300 shares at this price. But there are many, many market makers. In fact, there are levels of NASDAQ screens. Normally, if you don't pay the fees, I mean, these days it's not that much of an issue. I pay $5 a month to Robinhood. I can see the so-called level 2 screens. You see most of the order flow. But in the old days, you pretty much saw what we call the inside codes. So you basically saw, let me give you an example using the Robinhood screen. Come on. This is NVIDIA, for example. Okay. Now, this tells me, at least as far as Robinhood knows, somebody's willing to buy 360 shares. Of course, these move pretty fast right now. 400 shares at 114.59. Somebody's willing to sell slightly higher than that. Those are the inside codes. The lowest bid, the highest bid, and the lowest ask price. Okay. If you want to execute a market trade, suppose you want to execute a market sell, you're selling to somebody's bid. So if I wanted to give a sell order, I don't have any NVIDIA shares. I have options, but I can sell 320 shares at 114.40 right now, almost immediately. There's no guarantee that by the time it's executed, it's going to be there, but it's going to be close enough. But based on this, you can give other orders. There are orders, things like limit orders. I'm willing to buy, but I'm not willing to buy at 114 right now. Maybe I can give an order that says 113. If the price actually drops there, it can be executed. Or I can give an order for limit sell. Sometimes you can give orders that are conditional. These are called sometimes stop loss orders. Suppose I bought the stock thinking that it's going to be doing well at 115. But if the price goes below 112 and a half, I may be concerned that it's going to go down even more. If you're not actively trading, you may say, okay, if the price ever passes below 112 and a half, execute a market order, which means sell whatever I have at the best possible price. You can even do a limit order with stop loss. It says the trigger is 112 and a half, but don't sell it anything below 110, for example. Sometimes the things tank so fast. Uh, Stop order guarantees an execution, but it does not guarantee a price. Um, Limit order uh, guarantees the price, but it does not guarantee execution. Just because I'm willing to buy something at 114 doesn't mean price will come there. Stop order, it can be. You can do similar stuff on the other side, especially people who are shorting stocks. You know, especially on if there's a big short squeeze, those prices can go up so fast, your head will spin. So if I'm short, I'll definitely put up a stop order above a certain level. It's going to be executed. You just don't know at what price yet. Because of multiple market makers, typically NASDAQ stocks, unless they're very small stocks, tend to be a lot more liquid because, there's more competition. But nowadays, a lot of the trading actually does not even happen in the exchange itself. We have things called electronic communication networks. These are essentially little islands where people can trade with each other. I mean, they are still reported to the exchanges. You can see the results on a lot of different websites, but you don't have to go through stock exchange. How do you think Robinhood is able to allow you to trade without any commission whatsoever? None. No, none. I mean, there are some fees on option trades and stuff, but on any stock exchange, nothing. I mean, I pay $5 a month to be a gold member so that I can see the depth. But other than that, I don't even have to pay him anything.